Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for the Emini S P for Wednesday, September the 2nd. Let's look at our calendar, news calendar for today. We just had the ADP non-farm employment change, expecting 1.2 million in job additions, but we ended up falling short at 428,000. Let's see how the market reacted with our 30,000 foot view here. On one of my favorite charts here, which is our daily chart. Let me just get that real quick. You can see here, astonishing market continues to move higher and higher from week to week. I think 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of the last 9 sessions that we had in the S&P 500, we only had one negative day, and today we established, open up the market again with another all-time high at 3,556.25 thus far. Market continues to surprise us with the volume. Let's see if September brings in a little bit more volume, some volatility. The idea here is, my friends, do not fight the trend. Do not fight the trend. Remember, you're not going to go wrong going long in this market as long as you wait. If it's on the downturn, wait for the breakouts to the upper side. That's what strategy that we're using right now. The market starts retracing. If you have a quick, very recognizable support, wait till it hits that support. Wait for the confirmation of the breakout to the opposite side and pull the trigger. That's what we've been doing and been very successful at it. Let's look a little deeper at the detail of this market as we look at this time frame here. As we can see, the same pattern. Market continues. It's just an impressive market. The recovery has been astonishing. If we go back to the daily chart here, and this is something that I just wanted to keep in perspective. This is where we were. Remember that this is where we were back in February before the market drops. Remember the bottom was March 23rd. I want you to realize where we were and where we are today. It almost seems astonishing that all of this took place, this huge pandemic drop. Look at the recovery. The recovery has been quicker than anybody thought, basically a V pattern. It's been an astonishing thing. There is really nothing that we foresee technically that can force this market to change course, other than obviously the usual profit taking. There hasn't been any negative day in several weeks. A day that, it's a substantial day, something that can, the market can just, you can see the market profit taking. So far, the market continues to rely on its sentiment, whether it's founded or not founded, guys. We should not fight against the trend. Try not to do that. Try not to guess on tops. Try not to guess on bottoms. Trade the trend. You're not going to get hurt trading trends. Market here, last several days, we've seen the market kind of moving sideways just a little bit. Not yesterday. Yesterday, the market blew right through these particular resistance areas that it had here, breaks through cleanly through the pre-market. There is a slight reaction, obviously, to the negative ADP, but it's also coincides with the fact that the market hit an all-time high in the pre-market, so the market is also retracing for that. It's an obvious thing. New market highs, markets tend to retrace. Let's look over here at another time frame here. This is closer to our sorry about that. Give me 1 second. I got the chart up. Closer to our trading time frame, we use tick charts here. This is a 610 tick chart. As you see, this was yesterday. Market continued from the morning, just continually moving up, up, up. Pre-market breaks clearly through. There's our high. We need to continue to buy this market as long as the market remains above these lines here. Let me just draw you a quick trend line here. As you can see, there's a trend line adjustment here. We can adjust it to here. As long as the market remains above that level there, and there's another clear compression. We've been having these kind of patterns here on a regular basis, coming off all-time highs. That's the compression there. Obviously, there's a lot of room to the downside. There's no doubt about it. But also, don't forget, measure your fibs. Measure your fibs. Let's see where the market could potentially come down to. And here's a good area where the market come down. There's a huge pivot here, which the market can come down here and use as support to continue higher. Now, any one of these levels, whether it's 38, 50, 61 in the market, any break below that, then you're looking for a run to down here. That's what you'll be looking for. But other than that, as long as the market remains above this north-south line, we're expecting more continuation. Don't complicate trading, guys. Don't complicate trading. If you notice, we're looking at a chart. It's pure price action. Anything else that you have as a tool, make sure that that complements what your hypothesis is. Do not rely on indicators. The most important indicator is your right edge, which is price action. Let me know if you have any questions. Have a great trading session.